Kia ora, I'm Carolyn Young, Chief Executive at Retail NZ, and welcome to today's episode where we'll be discussing last week's budget and discover if there's any positive news for retailers. So take a short break, grab a coffee, and listen in to what the budget holds in store. Today, I'm joined by Darren Gibbs, who's a senior economist at Westpac. Darren joined Westpac in 2023. He began his career as a macroeconomist at the Reserve Bank before moving to the British Treasury in London. In 2000, he joined Deutsche Bank New Zealand, where he spent 16 years, including a decade as the bank's chief economist, contributing to the bank's NZ and global reach product suite. Prior to joining Westpac, he was a consultant providing contract research to Deutsche Bank Australia and Daiwa Capital Markets Europe. Kia ora, Darren, and welcome.
Thank you. Welcome.
So on the 30th of May, government presented their first budget with lots of anticipation around what was going to be included. We've got plenty to cover, so let's get into it. I guess, the question on everyone's lips really is, do you think that the budget will help restore confidence to the market? I mean, that's, one of the biggest factors for retailers, that consumer confidence.
Well, I think what the budget has done is removed a source of uncertainty, and that's helpful. Obviously the government is a key player in the economy. There was uncertainty about exactly what the government would do in the budget, particularly the form of the tax cuts, the size, and when they might take place. So we now have certainty around that. So I think that is positive. Does it necessarily lead us out of recession? Not so sure about that. Confidence is quite low at the moment across the economy. I guess we'll see new business surveys at the end of this month and the beginning of July. So we'll see what role the budget has there. Confidence has been sliding, though, in recent months. Of course, a key driver of that has been the messages from the Reserve Bank, that message that interest rates are likely to stay at current levels until, certainly into next year and conceivably well into next year, given what we heard from the bank in May. And I guess the other thing I would say is, this recession is a little bit different to what we've had in the past. It wasn't driven by an external shock. In fact, what it was driven by is the Reserve Bank. It's a recession that was engineered deliberately to take an economy that was overheated and try to bring it back down into better balance, to take inflation from 7% back to somewhere near the midpoint of the 1 to 3% target. So, even if the budget has boosted growth, and arguably it may have done, that's actually a problem for the Reserve Bank, not something that's good news for the Reserve Bank.
Yeah, it's one of those dual-edged swords you take with one and give with the other, right? And then we still end up in the same place. And I guess
Absolutely.
one of the key things that we've been talking about, or everyone had been talking about in the lead up to the budget, because it was a promise from the government in the election campaign, was about the tax breaks. Looking at those tax concessions and, what the average person is going to take home, from 1 August, do you think there's enough in there to give a boost to retail sales?
Well, I think there'll be a boost for some retailers. I think what we'll find is it'll affect different retailers in different regions in different ways. I mean, clearly there are some families that are struggling out there, living paycheck to paycheck, and that money is, I'm sure, going to be spent. I would imagine that if you're a retailer supplying staples, so food, apparel, just the basic necessities, um, I would imagine there's a good chance you'll see a lift in the second half of this year. But if you're providing discretionary goods, maybe less chance. Certainly for and if you've got a mortgage at the moment, you're probably less likely to just run out and spend this additional money, particularly at a time when people are becoming a little more concerned about the prospects around job security. We are in a rising unemployment environment, and that's something also that people have to take into account when they think about just how much of this tax cut they may wish to spend. And then on the regional sort of point of view, obviously down in Wellington, there's a lot of people there that are not getting a tax cut because, in fact, they're losing their jobs and losing all of their income. And so down in Wellington, I would imagine it'll be a different story to what we'll see elsewhere in the country.
Yeah, and the interesting thing about Wellington, of course, is that it's not just those people in government agencies and departments that are losing their jobs. It's a lot of other ancillary businesses that
Absolutely.
feed into government sector. So, there's feeling in Wellington a little bit depressed and the numbers might be quite grim over the coming months as the reality sets in from 1 July when that new financial year takes hold, which is when a lot
Absolutely.
of those numbers, start impacting. So it does look like it's quite tough. But your research at Westpac has shown that if you don't have a mortgage, you're actually spending a little bit more. So there's those that haven't got a mortgage have got a bit more discretionary spending, so may be more inclined in some of those areas. So maybe retailers targeting some of those people from their data analysis around, what people spend and who they spend in the age groups, just doing some work on that space might also be helpful, I guess, for them.
That's right. Yeah, I'd agree with that. Yes.
Yeah, and look, the big issue, I think it's a really massive issue that we talk a lot about in New Zealand is around infrastructure, right? We talk about how do we get agreement across parties on infrastructure. What do you think the budget showed us in that space? If we think about freight and roading and ferries and all of those things, in retail, it's really important to get goods across the motto and how we can get them from one end to the other. Do you think that the budget's going to deliver in that sort of space?
Well, there was certainly something there for land transport, particularly roads, where you had another $1 billion put into the land transport fund to accelerate the national roads of significance. So that will be helpful. I mean, obviously, still these are big projects with probably quite large lead times, so it won't be an immediate panacea. But certainly thinking about where things might be 5 years from now, that was a positive. There was a couple of $100 million also allocated to Kiwi Rail to sort of build more resilience into the national rail network, so helpful there as well. Obviously, with the ferries, it's still work in progress. Nothing in the budget to solve that particular problem. I would imagine in the next few months we'll hear more on that. It's clearly something the government, the minister, are working on, but it's a pretty difficult issue.
Yeah, and there's a big investment, and I guess the big thing for retailers around those ferries is actually what is Plan B and what's the time frame, and how will we know we've got certainty across the existing infrastructure within the ferry network to make sure that we can continue to move freight between the islands. That's the piece for retailers. That's pretty tricky, I think, right now. So
Yeah,
yeah,
yeah, absolutely. Yeah.
yeah.
I mean, it is essentially part of State Highway 1. And, if that part of the network suddenly isn't there, obviously we've got problems as a country.
Yeah, and moving freight by air is hugely expensive and is just going to continue to provide extra costs for consumers at the end, because a retailer can't withstand all of those sort of additional costs. So they are relying on the cost effectiveness of the ferry service. So yeah, be really interested to see what happens in that space. So, if we think about, largely the budgets behind us now, what else will drive the retail sector in the coming months? We've talked about it might be quite difficult. The Reserve Bank's been pretty clear on what they're wanting to see over the next, 9, 12, 15 months. What will drive good sales for retailers?
Again, inflation is pretty much everything at the moment in terms of what's driving the policy outlook. So, what retailers need is for everyone else in the economy to do what they've been doing, which is to sort of buckle down, bring inflation down in the sectors where they have some influence. The
Yep.
sooner we get inflation down in that services sector, where inflation is still running at close to 6%, the sooner Adrian Orr will relent, and we'll have lower interest rates. And lower interest rates would mean a more buoyant housing market. That'd be great in terms of boosting, particularly demand for consumer durables at the moment. That's clearly a part of the retail sector that's under particular duress. So if we were to see, that lower inflation, the beginnings of an easing cycle, a lift in the housing market, that would certainly be a better environment for retailers. But for the moment, that looks like it's a story for next year. And so the constant refrain I hear at the moment from a lot of people that we speak to is survive until 2025.
Yeah, so cash is going to be key, and really thinking about trying to see that light at the end of the tunnel. I think that's the thing that retailers that are on that edge, I mean, how can they survive through? Is just actually when will they see that light of that change, and when will things turn in their business so that they know they can continue to invest within their business to survive through this period and come out the other side.
Yeah, all being well, even if the cash rate doesn't move down until the beginning of next year, if it becomes clear towards the end of the year that we are moving back into better balance as an economy, that inflation is coming down, and that the OCR will come down early next year, then wholesale interest rates will begin to move down ahead of that. Mortgage rates will begin to
Yes.
move down, and we could start to see the economy lift before the end of the year. So that would be the a good scenario should we achieve that.
Yeah, that's the optimistic, right? That's
Yeah.
the best case scenarios with the bank starts, decreasing rates, at the end of this year, and certainly we know that they will start decreasing rates probably before the OCR, but that will be a good indicator, and we'll be certainly keeping a close eye on that to see how that tracks through. Look, thank you so much for joining us today, Darren. It's such a pleasure talking with you and to hear how Westpac is supporting the retail sector. Westpac's Retail NZ's strategic partner and whose support enables us to keep you up to date with everything in retail. So thank you very much. I hope everyone's coffee break was energising and that you enjoyed the budget update. And finally, don't forget to subscribe to Retail Unplugged on your preferred channel so you can keep up to date with all the industry knowledge. Until next time, ka kite anō, bye for now. Kia ora.